Hello everybody, this is AK. I'm back. So for a while now I've been saying that I my focus is not really on prices, and that my focus is on fundamentals, is on valuation, and whether a company is able and willing to pay me a meaningful dividend, sustainable and meaningful dividend. Right, for a while now I've been saying this, but prices are important, but they are more important to traders than they are to investors, right? I mean, if you're trading, that's how you make your money. You just look at prices up, down, when to buy, when to sell, and you make the difference. Hopefully, make some money, right? And you don't really care about the fundamentals. Well, when I was trading in my younger days, that was what I was focused on. I was just looking at prices and the price action, looking at charts all the time, and trying to see where they are going, and set target prices and cut loss prices and all that kind of stuff. Right. And that was in my younger days, and I said I made about $500,000 back then. Pretty stressful days, but okay lah. Over a period of about 10 years, I made about $500,000. I wasn't a fantastic trader. I was just above average. I think so. Right. So I've morphed into an investor for income, right, and looking for value and dividends, right? And especially now in my retirement, the dividend angle has become even more important, right? Because I'm retired, I don't have an earned income, and I depend on my passive income for a living. So I'm not so concerned with chasing after capital appreciation, right? I know there are people who talk about total returns all the time, about how you get dividends plus capital appreciation, and that's more important than dividends alone. Well, yes, that's true. For many people, that's what they talk about. But for me, I think if the capital appreciation happens, well, that's a bonus. That's the way I look at it, right? And if I get paid consistently and meaningfully, I'm happy enough, right? Yeah, that I mean, if I'm not of this mentality, I wouldn't be happy with bonds and T-bills or fixed deposit, right? So it depends on which stage of our life we are at, right? And what kind of thing, what do we want to achieve, right? We all have different circumstances, and we have different goals. Okay, so why am I talking about this? Well, there are people who wonder why I'm not going in heavy on tech stocks, for example, right? And that's one reason, right? What I've said is one reason why I'm not going there. And of course, I don't really understand what these tech stocks are, so I try not to go into stuff that I don't understand, because then if I don't understand what I'm buying, then if the price goes down, I'll panic, and then if the price goes up, I don't know when to sell. Right? Okay. So then that's one thing, and then another thing is, of course, recently I bought some shares of Alibaba. Right, and then people wonder why, right? And I did explain. I say because it looks very undervalued, and I've done some research into Alibaba, so I know a bit about the business. And from the numbers, it does look very undervalued. But like I said, it doesn't quite gel with my primary objective, because the dividends, well, it's not too generous enough for me, and but I also said that there's a possibility that the price could double from here, right? So depending on what we want to achieve, we would either be buying, or we will be avoiding, or in some cases, some people might even be selling, right? So people believe that maybe Alibaba's share price will go down to $70 again. Maybe they're short selling. How like that? Well, they do what they do, right? Personally, I think that reversion to mean or mean reversion will happen in time, right? Prices always revert to their means, valuation, for example. And Alibaba, I've said before, the PE ratio, the mean PE ratio for the last 13 years, like 30 times PE ratio. So we could see it revert to that PE ratio, right? Given enough time. How much time, I don't know. Right, so if we are of that belief, and if we are very concerned with capital appreciation and we think that is going to happen, then Alibaba is still a buy even if the price goes up, right? Some people tell me, oh, AK, after you talk about Alibaba's price went up, now I cannot buy. See, that's the danger of riding on someone else's coattails, because you say AK bought at this price, I will only buy at this price. The price has gone up and I'm not buying, right? So you're just looking at prices, right? But if you believe that Alibaba, if you've done your own research and you believe that Alibaba should be trading at a higher price, then even if the share price has gone up like 5% from AK's buy price, it's still a buy. It's still a buy. So because it's like 80 Hong Kong dollars, has gone up 5% to 84 Hong Kong dollars, for example, then if you think that it's going to double to 160 Hong Kong dollars eventually, then 84 Hong Kong dollars, when it's $160, I don't know, 2-3 years later, or maybe 1 year later, it's $160. I'm going to look back and say $84 was cheap, right? It's just like the banks, when it was at $31.80, $32 when they announced the 1 for 10 bonus issue, then I told people that it's still okay to buy some, and then there are people who say, oh, but you bought it at much lower prices, $19 to $24, you even bought at $13 or $14, now $31 or $32 is come gong to buy, all-time high, and then the price has gone up to like $43, $44 per share. Then you're going to look back and think, oh, $32 was cheap. It's all relative, right? And it's always perfect on hindsight. So it's important to know what we are buying and what we think the true value of that something is, or what we think it might go to, given a set of reasons that we ourselves have derived, that we ourselves believe in. So if after listening to what I said about Alibaba, and if you do your own research, and if you believe that it is worth more, it should be trading at a higher price, then right now it's still cheap. In fact, today, for example, the price retraced. I think it came down just a bit, 1 or 2%, I cannot remember exactly. So the boat came back, right? Personally, I'm not adding a lot more. Like I said, if the price should go 5% lower, then I'll probably add more. And I don't want the position to be bigger than 2 or 3% of my portfolio, because it isn't something that gels with the main focus of my investment strategy, right? So if AK can talk to himself, so can you. Bye-bye.